Stocks of the day has been Welspun Enterprises, the stock on our radar, up in trade today, up big in trade today on the back of the divestment of road assets of the company for about 6,000 crore rupees. As we speak, it's at the high point of trade. And remember, yesterday as well, it was a 7% up move. The company will sell 6 assets to Actis for about 6,000 crore rupees. And this excludes the 3,000 crore rupees that they are likely to receive from NHAI as well as PWD Maharashtra. Akhil Jindal, the Group CFO of the company and Head-Strategy, now joins in. Thanks a lot, Akhil, for joining in. The first question, how much revenue are you foregoing for you to get this 6,000 crore rupees? And what does this do to your balance sheet? What's the debt on your books currently?
Yeah, so let me just tell your question in two parts. One, as you rightly said, this is a very important day for the Welspun, for a simple reason that the exit that we are doing now is almost valued at 9,000 crores. 3,000 crores is what we have received or likely to be received from NHAI/PWD on the balance construction period. And also 6,000 is what the enterprise value that Actis has valued, for the entire asset. Almost 3,500 crore is the debt that they are going to take over out of it. So you can effectively say that the equity value is in excess of 2,300, 2,400 crore. The second thing on the debt of the books of the company, as Welspun Enterprise, we have hardly any debt. We have 300 to 400 crore of long-term debt, small working capital here and there. So that would mean that all the freed up money will come up to the Welspun Enterprise, and this would be a big boost to our cash position in Welspun Enterprise. As far as the company's overall gearings are concerned, we have a net worth of more than 2,000 crore in Welspun Enterprise, and naturally this all money will come back to the company, to the parent for all its further expansion plan. So I think all in all, this is quite an important deal for us. One, we have started when this deal 2016 when we started the HAM portfolio. Welspun won the first HAM in the country. So Delhi Meerut was the first HAM that Welspun won, and not only we completed this project well ahead of time, but also this project has become a model project for the entire NHAI, for entire country, and we are very, very proud of that. And after that, we have completed 5 more projects since then, 4 HAM and another BOOT project, and again a very important BOOT project in the country.
Got
so
that.
In all sense, I think, yeah.
Mr. Jindal, just a couple of more questions, right? You said large part of the money that comes in is going to be pumped into growth. Can you tell us what is the capex plan for the next 1 year? How much of the money will you put in, and what are the growth plans itself?
Yeah, so we have a very good, healthy order book position on the EPC side. Almost 12,500 crore EPC book we have now got, which is comprising of 6,500 on the road side and 6,500 almost equal size on the water side. You must have felt that recently we have also won the country's one of the largest STP project in Mumbai, in Dharavi. And that means that a lot of money, that we are, going to get. A part of that will be, of course, used for the EPC growth. But we have still be left with a lot of, I would say, surplus money for our future growth. So in that sense, it's a good deleveraging deal for the group. And at the same time, as
Mr. Jindal, right, Mr. Jindal, we get all the points that you're making, that it is a landmark deal for the company, the deleveraging plans, etc. We get all of that. Can you just tell us that of the 1,400 crore rupees that you made in 2022 in terms of revenue in FY22, how much now goes away because you've sold off these 6 projects? And you said some cash will come onto your books. Can you give us net of tax, net of the debt that it goes away, etc.? What will be the increase in the cash position of the company?
Yeah, Mangalam, it's a very, very relevant question for us. And clearly the 1,400 crore number that you mentioned to us was not, not getting affected by any of these actions, because it was a standalone number and it was an EPC book that we were talking about. So just to answer your question on the revenue side, there would not be any impact on the revenue because of this exit. But at the same time, as I mentioned about the cash usage, we have very little requirement in the EPC businesses. They are self-generating. A lot of money we will get over a period of time from the client itself. And the future expansion is what the board is discussing. And I'm sure a lot of this money will be used for that purpose.
And this 3,500 crore rupees that you said are receivable from NHAI and PWD, by when do you intend to receive it?
Yeah, quite a large part of that is already received. As you would know, that during the construction of the HAM project, they fund the 40% of the equity in case of the NHAI HAM, and 60% in case of PWD. So quite a large part of it is already received by the company, but for the small amounts from PWD, which is also in process. So you can say that many of these money has been already received, and it is already put into the business.
So you said that the EPC business does not require a lot of cash. It is self-generating. You are getting a fair amount of cash. There is not enough debt on your books right now. So do you at some point plan to return the cash to the shareholders, maybe, you know, via a bonus, buyback, rather dividend or a buyback, etc.?
I'm sure, Mangalam, these are all something that the board will consider at the appropriate time. And they are also, very, very clear on the fact that what we promised to our stakeholders sometimes back in terms of the full circle is something that we are going to achieve through this deal. And in that sense, whichever way the board will feel the right mechanism, they will decide on the, returning this money to the shareholders or to deploy it in the further business growth. That is something that we will evaluate over a period of time.
Any more such road assets that you have that you're perhaps exploring to sell? Any conversations that you've had with buyers?
Yeah, you're right, Sonia. We are still left with two assets.
Okay.
One in Tamil Nadu, one in Bihar, which are under construction. And both these projects at the appropriate time will also be divested. We have an arrangement in our definitive agreements with the actors that they will have a right to first look. And naturally, they are our good partners. So, we would be showing those two assets to them very shortly. And in that sense, they would be the natural buyer.
So what would the enterprise, what would the value of these two assets be? And would you be looking at anything in this calendar year itself or the next one?
Yeah, a little difficult for me to promise on the timeline because naturally, they are interested in the operational assets and they have taken over some of the operational assets. This is an under construction project, so it might take a little while for them to really acquire. But at the same time, naturally, the partnership is for future as well, and they would be very keen to look into for their portfolio such assets, addition at an appropriate time.
Okay, all right. We've run out of time, but thanks a lot for joining us and giving us a lot of details. And the shareholders, the street definitely likes the fact that you've managed to sell that business to Actis. You've raised money and you're going to pump in that for growth. The stock is up almost about 8% right now. Let's do one thing. Let's take a quick